Yeah. That's a good point, because I was just thinking about the term fiduciary in regards of traditional assets and that duty and that responsibility and the compliance that you are that's needed, that you're forced to know to ensure that you don't get sued. Because the larger the company, the larger the opportunity, the larger the game plan in regards of being risk averse. When it pertains to anything that could get you in trouble. How has that fiduciary duty shifted or expanded once you include, digital wallets, crypto holdings? Like what's some of the differentiation that occurs from some of the traditional way in which it needed to be represented to how we are introducing this new, we'll just say, world of asset gathering?
Yeah, I guess I'm a bad proxy, right? So I got to take myself out of this, right? I only know crypto as an advisor for the last 12 years. So nothing has really changed for me. It's been the same. But building technology for advisors and educating them, I think one is crypto trades 24/7, 365. I think that's a big thing that advisors can't wrap their head around. Institutions as well, right? Like, when do you snap the price? Like, is it at 4:00 like everything else? So I think that's part of it. I think the second thing is that unlike any other asset class, this was built for retail first. So more than likely, the client got access before their advisor did. So now the client probably knows more than the advisor, right? And that's not a seat we're used to being in, especially when it comes to investments, right? Usually the only thing that a client has more info on is their business, right? They know their business better than yours if they're a small business owner. But advisors aren't used to sitting in that seat, and then you get a little bit of imposter syndrome. So it's just easier to be like, I don't want to deal with it. Yeah. And I think another big one is as the space has grown, there started to be sectors. Me and Eric talk about this all the time. For those listening, Eric is my partner at 401. There's different sectors in crypto now. There's apps and protocols, right? Like, there's all these different things that people really don't get. It's not as simple as just Bitcoin and everything else. There's these different buckets now that crypto falls into. And with that, and I've been saying this recently on the podcast tour that I'm on right now, is that this is the first time in my career that there are multiple venues to get access. Like, I mean, you can get it any way you want it now, right? Now you get it on E-Trade, thanks to Morgan Stanley. Schwab is launching spot trading. PayPal, Venmo, Cash App, which is still my go-to and my favorite of what I recommend, Coinbase, Robinhood, you name it, right? So I think there's so many venues now. When I first got into it, it really wasn't, I was there in the days where people was trying to open a Coinbase account and it took 4 days, and then the money took another 4 days, and then, so it's just a different world now. And it's just like anything else. The longer you wait, right, the deeper it gets, the bigger the problem gets, or the issues. So the more firms and designations and boards and everything else waited, the space just got away from them. Now is almost impossible for them to wrap their arms around it.
Yeah.